Hello again. Hopefully everyone got the opportunity to get a beverage and carry on with the rest of the event. So again, my name is Paul Ross. I'm really excited to be hosting this next panel. I think we talked a little bit about this topic in Ray's first keynote around what the reality of deal sourcing has been, what experience we've seen in our platform. I think as a platform vendor for so many venture capital firms, we're kind of in a unique position to see what's happening before it happens, without obviously divulging any secrets from anybody. But this topic's really interesting because I think the perception that many have had, the work that you've been doing, has been very variable across organizations. So I think the opportunity to hear from Kevin Zhang and Eugene Lee is going to be really fascinating for us to go through. So just to start things off in terms of us looking at navigating the changing deal landscape for the rest of the year and into 2023, Eugene, could you just introduce yourself quickly?
Sure. My name is Eugene Lee, partner at Omers Ventures. We're early stage venture platform where I focus on all the B2B enterprise software investments for our firm.
Cool, thanks. And Kevin?
Hey everyone, is my mic working?
Yep.
Okay, excellent. My name is Kevin Zhang. I'm a partner at Bain Capital Ventures. I focus on our early stage financial technology and application software investing. We are, as some of you may know, Bain Capital is one of the world's largest asset management firms. We have a variety of divisions focusing on all sorts of alternative investments, from private equity to private credit, to life sciences, to real estate, insurance. I actually often struggle to name all 9 or 10 of the categories. But obviously, one of our product groups is venture capital, and so we have we operate as a partnership within the broader Bain Capital, raising outside LP dollars to invest in primarily sort of seed through Series C or D investments in B2B.
I do enjoy every time we introduce you, Kevin, you talk about 4 of them, and then you're like, and there's other ones too.
And they're not even the same 4 every time.
Yeah, exactly. That's very true. So Kevin, maybe I'll start with you. So we're obviously here to talk about the changing deal landscape. There's lots of opinions about what's happened, where the market's going every day, new stories. A lot of the stories recently actually have been about dry powder and the emergence of another wave of investments that are coming, as well as the things that we've been talking about. I'd love to hear your thoughts on what you see as real and just noise in the marketplace around this next wave of potential investments and where that's going to be focused on.
Yeah, I think that I think what's obviously very real is that we've had a return to reality, so to say, on valuations in the public markets, and I think that's filtered its way through the private markets. I think what is real is that I think we're all aware that the home markets aren't going to pay the multiples they were paying before. We weren't even paying those multiples last year. So certainly, from a portfolio management standpoint and working with our founders and teams, I think we have to be honest about kind of where the next round might come from, what milestones we have to achieve in the dollars we've raised to date. And then B, when it comes to new investments, I think there's certainly a strong incentive to rationalize a bit around what the new reality is. That runs into the face of, I think, founder expectations and kind of like the social dynamics of what they've heard from their friends who started a company last year.
Right.
And I think that the net of that is it feels like deal activity is dramatically down from last year. Things aren't happening as quickly. People are in no rush, and founders, frankly, are in no rush to raise. I think that's all reality. I think to me, the dry powder piece, I think, is a little bit more noisy. I'd be curious, certainly folks in the room feel differently, or Eugene does, but certainly I've never heard sort of my partners say, we have lots of dry powder, like load the cannon fodder, like we got to get all the money out there. Yeah. And I think the message from LPs has been actually, last year was insane.
Yeah.
And we would really not mind if you dramatically slowed down the pace. There were folks who invested 3-year investment periods in 6 months, and LPs I think are overextended. So I actually, unfortunately, as depressing as it is, I tend to think that the dry powder narrative I haven't seen in reality yet.
Yeah, I think it's definitely one of those media things that's very clear because it's actually very measurable. You can put a number. I saw it was a story of like 300 billion in dry powder VC. Like it's just measurable. So, but that doesn't sound like it's kind of like anything that's in your head or your team's head about what you're doing. Just to extend onto that conversation a little bit, have you changed the criteria that you're using for your investments last year versus this year? Because the speed thing is obvious, but the criteria thing might be a little bit different for. Have you adjusted your investment criteria? Have you adjusted things, the financial modeling that you're doing from last year to this year? Or is it consistent because that's how you operate?
I think that the market has adjusted criteria in the sense that I think it felt last year like, the train was only stopping in the station for like 5 seconds,
right.
And so you were either getting on the train or you weren't. And you would do as much as you could to figure out if you wanted to be at that destination or not.
Right.
But it was all about like how do you see the train, or how do you catch the train early? I think kind of we have more time. There's not enough passengers, and so I think that the dynamics of do we have to be in the seed or we'll never see the deal again? And do we have to make a forward bet because we think there's enough data to believe that it will hit the metrics? Versus we can wait until it does hit the metrics. Right. I think the market dynamics have changed. Our preference, of course, is always to maximize reward for risk. Yeah. And so we'll if the market's doing, then we'll take the kind of additional time and data. I think. Eugene,
what's your perspective? Because you obviously invested some different stages to where Kevin is, but I'd love to hear your thoughts on this.
Yeah, I mean, I think our strategy hasn't changed from last year when the market was crazy to this year when it's a little bit slower. We've always stuck to what we call fundamentals, and like, yes, last year you would get a little bit of FOMO on wanting to jump on the train. I think this year, we've really focused on fundamentals, and so yes, we have the luxury a little bit more time to evaluate deals. So it's going back to those fundamentals of, if it's early but not too early, and they have some metrics, looking at some of those metrics, really thinking about, hey, what's it going to take for the amount of fundraise to get to the next round as well, is something that we've been focusing on a little bit more, instead of just, hey, it's a great space, great market, great team, and then jumping onto the bandwagon from that perspective. I'd also just, on your first question too, I mean, we've seen the similar things that Kevin has seen as well. I think, there is still so much money out there from a deployment perspective or capital perspective. I mean, if you're lucky enough to be a founder to raise and find that one, it kind of disrupts the whole kind of process. But we haven't felt any pressure to deploy dollars. It's still about finding the right deal, that fits kind of our what we call a buy box, and moving forward from there.
I think it's really interesting that keeping to the fundamental model, and then whatever the environment that you're dealing with from a capital perspective is consistent, which is great to hear. Obviously, I think to your point around like last year was a lot more FOMO happening, and I think the important thing you said there, Kevin, was like the deal's never going to come back was the thing that you were scared of, or concerned about. Flipping this around to going from the investment side, which we'll return to in a moment, but as you kind of look at you mentioned portfolio companies and working with them as well, has that changed a lot in terms of how you're spending your time? Looking at these really short-term investments that we needed to get to, or now spending much more time with portfolio companies, as there are many people who are challenged at this point in time. Like Eugene, how's that gone from your perspective in terms of working with those companies?
Yeah, I mean, I think when the market took this downturn, I mean, for me, it felt very much like COVID 2020 when it first hit, where you're doing a lot of portfolio triaging. Hey, how do we extend runway? How do we, again, get back to the fundamentals of operating the business? I would say the first half of this year, I would say a lot of it's been doing that for us, and we'll continue to do that as the kind of market evolves. But I mean, we're also venture investors trying to look for new deals too, right? That's part of the reason for our jobs, and so we're out there actively looking.
Yeah. Deal flow matters.
Yeah, it does. I mean, I think it's always, when we're talking to our portfolio, we're always asking our portfolio, what's the new business coming in on those portfolios. But at the same time, we're also now a little bit more focused on customer success and retention of your current customers. It's the same way that we need to think about our as venture investors. We have our own current customers, and we're looking for a new deal flow as well.
Yeah. Kevin, any thoughts on that?
Yeah, I mean, I think Eugene covered the piece around there's more time, with the portfolio and being thoughtful and supportive with the transition for them. I think that, we also can spend, more time going deeper on diligence, before we have to make decisions. I think that, this is a relationship intelligence, conference. And I do think from a sort of relationship standpoint, I think that the mindset, I think from a risk reward standpoint, we felt like in an environment where you didn't have a ton of time, you'd rather write smaller dollars at a lower absolute price. And so if we were looking to make great seed investments, last year, a lot of it was about, what could we do to discover opportunities earlier. It was about knowing that sort of someone was going to start a company, and having sort of relationship intelligence on the person and the talent that's going to start the business. I think that, this year, we may be more incentivized to kind of wait and see kind of more data. And so I think kind of, my view is you may see us and my colleague Aga, who's here, may talk about this more. I think you may see us sort of incorporate more data-driven signals, about companies into our pipeline management, and sort of look for, in our Affinity instances, sort of, companies that sort of spike on certain data points, that sort of show more of a concrete business inflection point versus a kind of person's career inflection point to being a founder.
That's really interesting because, obviously in Affinity, we try and provide both sets of those data to people in the company. And it's an interesting point of transition, actually, that you were describing, where it was much more, okay, this individual looks like he's going to be able to do it. This person she's going to be able to build that company. Let's get on it early versus let's take a little look at the trajectory of the company. Is that similar for you, or is it like you're so focused on seed, it might be a little bit different?
Yeah, we're focused on seed to C, I guess. Yeah. I like what Kevin's saying. We do the same thing. It's kind of like pre-diligence before the diligence, right? You're trying to get those, we call them signals at our firm. I don't know if Casey's here yet, but he's been working on that for us. But it's absolutely what we're trying to build towards.
Interesting. One interesting thing that was brought up when we were doing the prep around this was the broader ecosystem and how of investment and deal making is it impacting you, especially as you had some of those tough conversations with some of those portfolio companies. I'd love to get your thought, Eugene, and then to Kevin, in terms of other types of investors like PE growth or other things, and even at the I don't know if this is the worst case scenario, but investment banking for M&A engagement, selling companies, that kind of thing. Do you see that? Has that changed this year at all in terms of reactions, or are we still operating the way we were previously?
For us, we love those relationships, right? I think from a funding perspective, looking for partners upstream and downstream from a potential funding. I think the investment banking question, for us, for our portfolio companies to engage investment bankers, it's probably not what we're looking for, at least at the time.
Hopefully,
ultimately. But I think it's good relationships to have because they have a great purview of the landscape because I think we're sometimes so focused in on our portfolio companies finding new deals. They have a very good zoomed out perspective of the private and the public markets. And so we've tried to engage them just from those perspectives. And then, maybe they're representing the buyer, and so we've always tried to keep up with those relationships. And I think we're trying to do a little bit more of that because it has been a little bit, at least over the summer, a little bit slower and fostering those relationships.
I'll come back to that relationship point in a minute. Kevin, obviously within Bain, you represent a number of the different areas, but what's your thoughts on kind of the broader ecosystem and how that might have changed over the last 6 to 9 months?
Well, certainly, my sense is that, our friends in the industry, at the growth stage, have a lot more time to reach out and have coffee with me. And I don't think it's because they're excited to reconnect with me. I think probably they're just bored. But I think from my standpoint, we're always trying to think about the reality is, even in an environment where the investment process is slower, I think nonetheless, I don't feel any less busy necessarily. And I think we still want to be very thoughtful about how we commit and invest our time. Obviously, our relationships with growth investors and ecosystem partners and bankers and others are very important. And we all have a role to play. And I think the thing that I feel that I have more time to think about this year is how can we create more sort of scalable systems for having touch points with people in the ecosystem we care about that is appropriate to like our level of interaction and frankly like how helpful I can be on what time cadence.
Right.
So that might be thinking more about let's so I'm working the team around let's figure out maybe there's some kind of newsletter we can send every 3 to 6 months on the portfolio for our growth investor friends who are interested in what's going on and which things are interesting, what businesses might be inflecting. Are there kind of events and things we can do where they don't feel like they're obligated to have to bear with having coffee with me for 45 minutes versus sort of have kind of I'm happy to have the personal relationship, of course, but sort of how can we be most productive use of their time and ours? And I think this year's been we can invest in the infrastructure to go do some of that more effectively.
Yeah, I just add I think I love that idea. I mean, I think it's trying to go past the transaction, right? A lot of these, when we get emails and coffees, it seems very somewhat transactional. And so how do we actually build the relationships, share information, insights across what we're seeing, what they're seeing, what everyone's seeing?
Got it. That's an interesting point you made. You're both making around almost putting the infrastructure in place as well as the personal thing. I guess the obvious question, how are you using Affinity to do that? What's the thing that's driving you to be able to do that, Kevin?
Yeah, absolutely. And I think that we've been on the journey with Affinity now for, I think, well over 4 years. Time flies.
Yep.
And we've been using it from very early on. And I think our journey has been, one, having a CRM that we use with data in it, which frankly took us a lot of time. Having more folks in our bank capital community use it. So it's cross offices. We have offices in San Francisco, New York, and Boston, and kind of took hold in San Francisco, and then we moved across the country. And then now I think we're in the phase of scaling it across bank capital, which is slow and steady progress, and presumably you guys face more or less resistance from certain kinds of professionals. But we're now I think embedded with the technology opportunities team, which is our sort of mid-market and private equity product focused on technology. So kind of one of our close cousin funds within the institution. And so there's a collaboration piece. And now I think that we're in this phase, and I get my far more talented colleagues, Lena and Aga here, who can speak, I think, more eloquently than I can. But I think Affinity is becoming this is a data hub and sort of the workflow hub. It's already kind of the place where we all collaborate and where we as investors share our data through automatic sync functionality. And sort of manage our pipeline. And I think the next step has been how do we enrich that with additional data signals? The business of venture is more global, more real time. Sort of business come from anywhere, and we cannot manage kind of the pipeline size we need with just humans. And so I think we're working with engineering and data science to sort of add additional capabilities to prioritize and surface opportunities, as we mentioned earlier. So to me, kind of Affinity is a core part of that workflow, and that's sort of on the kind of company and founder pipeline side. And I suspect that that'll always be the priority, of course, but we will think about how to do that for valuable ecosystem partners and intermediaries over time as well.
Interesting. Eugene, any thoughts on that?
I'm going to let Casey kind of default because he's the mastermind of actually building a bunch of this stuff. But same stuff. I didn't go in my intro. I didn't speak to all the different groups that we have within OMERS, but we have a similar growth team, private equity team, and then OMERS is a $120 billion pension plan. So we've got many touch points. Yeah. To be fair, we haven't even extended it outside of our ventures and growth team. Sure. So we've got a lot of work to do on that end. Maybe
to suggest actually for the team at the back, Bob, could I have the slide advancer? I think it's over here on this side of the thing. I'd left it there. It'd be great. I think one of the interesting things is that you guys raised was around building the kind of personal relationships and capturing those as your teams get bigger. Thank you so much. Kind of how you're thinking about even like as your new associates come in, how you're thinking about like giving them the approach for building that network that feeds into those signals that you have. So I'd love to hear any thoughts that you have around how you're kind of advancing just the core building of network and relationship with your organization in the context of this change kind of funding environment. Kevin?
I was going to let Eugene answer that one first.
Okay. He has gone first a number of times. So Eugene, I'd be interested to hear your thoughts on like that, expanding the potential for the things that are driving those signals that you have.
Yeah, I mean, I think what would be interesting and helpful is like now that we're hopefully back to these events and stuff like that, and I think is the best way to expand your network and relationships. Is like, how do you incorporate this kind of stuff into Affinity in almost real time kind of ways?
Mobile application that matters again.
Yeah. I mean, I think. I mean, I'm excited to see people and meet people, but it's just how do you take it from here to the next step?
Right.
And I think you asked a little bit around our associates and the infrastructures. Look, I mean, I think we're back. Let's just say we're back, and so we need to encourage people to get back out there and do that. But I don't know if there's any other. I'm trying to think of any other things that we're doing.
No, it's okay. I was going to ask a quick question. How many people in the room were at Sastra this last week? One. Good for you, Eugene. What about Dreamforce? 1, 2, 3. Interesting. That's interesting. Yeah. Kevin, your thoughts on like building the network?
Yeah, I mean, I think for example, just this morning, we had last week we had a new associate start. This woman Campbell, we're very glad to have on the team. Campbell's been with us 1 week, and she messaged me this morning saying, "Hey, I saw that you met this company, 6 months ago, 8 months ago. These were the notes. I know the co-founder. Here's something I've heard about them. Should we follow up and get back in touch?" And so I can't emphasize enough the value solely of just like having the data in place. I mean, and having it be updated and fresh and available. And so such that someone who's just getting started has the sum total of our interaction history in most channels with basically everyone that we've touched from a firm standpoint. So I think that is a massive value add. And then I think that from a sort of career building standpoint for our younger investors, one of the things that we think is valuable is our data driven investing program. As they're building their own networks to get inbound opportunities, they're thinking about how do I assemble a list of high probability outbound prospects.
Right.
And so we think that kind of our data driven investing practices, which we might surface signals that companies are inflecting, or that if someone's looking to start a company, that is in and of itself kind of an ongoing outreach list that gives kind of our associates and principals a target list that they can go and sort of build their own pipeline with. And of course, that is sort of tied intimately with the rest of our pipeline management in Affinity.
It's really interesting, that context of helping those people build their own lists of targets, given we've been not going out and doing events, not engaging with people for 2-3 years. So it's an interesting.
I think it just helps build confidence too for the younger team members, just to get these little wins, right? Whether it's a good company to reach out to, but it's also setting them up for success, and that repetition of going into Affinity and finding these things because it's sitting right in front of you.
Right. Yeah. Showing value in their careers is an important aspect of it. The last kind of area I'd like to step on to would be, you both mentioned data. Like, I would be interested to know, like, obviously you both talked about like investing data, and your colleagues are building the platforms and you're doing a lot of things, but as kind of lead investors in a lot of ways, what would be the new data or data that you are starting to adopt that you haven't done before? Is there anything new that you're focusing on, or is it more the organization of it in something like Affinity to be able to get the right signals? Any thoughts on new sources of insight that you're looking for?
We're always learning. And again, I think this is an area where my colleagues know the data purchasing pipeline the best.
Yeah.
That said, I think some of the things that reach me and sort of that I feel conscious of that seem interesting, is sort of, commercial card data, commercial spend data, certainly from a B2B investment standpoint.
Stuff that used to be called alternative data, really. much more actual credit cards and that kind of stuff.
Totally, yeah. It seems that more of that is reaching the market in more filtered ways that could be useful.
Right.
We tried, the leading consumer card data business that Bloomberg acquired. That was just not useful, I think, from a B2B standpoint. I think, LinkedIn remains a very important channel. We are spending time thinking about GitHub. I think you can imagine us looking at all sorts of different signals around developer communities, Discord and Slack and Twitter. And I think there's a lot more. So people talk more about their B2B products now in more groups and communities, for better or for worse. So I think you can imagine us looking at those data signals as well. So I think there's actually a very rich panoply and roadmap of information that could be useful to us for identifying opportunities.
Awesome. Any thoughts, Eugene?
Yeah, the other ones that we're starting to look at more from a B2B perspective is there's some SaaS management tools that they're thinking about helping out, like IT spend and stuff like that. So they're collecting a lot of data on what's being purchased from that perspective. I think it's for us too. It's just about structuring that data in the correct way, where it's true signal versus noise. Because there's in the area that I invest in, and I think Kevin does too, is there's just so many companies, and so how do you parse that out?
Yeah, that's a very good one. And we actually have a panel coming up next, actually, which is focused on using the data and building that kind of signals to drive deal flow. So a good extension to it. All right, I want to thank you both for presenting here today. Unfortunately, we were going to have another presenter, Ivan, but unfortunately he was unable to join us for medical reasons. But hopefully he's recovering well. Again, thank you both so much for your insights. Really appreciate it. We will be breaking here for coffee until about 10 minutes past 10. Coffee is available in Oak Room, Oak Room A, where we'll be, in Oak Room B, where the partner lodges. And then we'll be starting here at 10:10 with a panel here in this room around the data topic that we just had. And then your colleague from Omar's will be in the other session talking about building their tech stack out. So with that, again, thank you both for joining us.
If you don't mind me saying, I just wanted to thank you for having us. And I want to thank the Affinity team as well. I can't emphasize enough how crucial Affinity has been to our team, our operations, any success that we've had in managing pipeline and relationships over the past few years. We feel very fortunate to have gotten to partner with you guys early in your journey. And I just want to offer, I'm happy to speak about that and our experience and our learnings over the years. Anyone at the conference would love to trade notes.
Thank you.
Thank you.
Now you go. No, I'm joking.
Same. What he said.
Thank you both. Appreciate it.